Hey guys, thanks for joining me today on this video. I dropped this video for you because of the market volatility that's been going on for the last 90 days. I know it's been super rough out there in the market, and so I want to give you this video just to give you some perspective and to help you make it through this volatility and wait for what's to come. And so I've titled this video, "The number one reason you will never get rich invested in cryptocurrency." And I know that sounds pretty harsh, maybe a little bit over the top, but it's actually true. It's the reason why you're never going to get rich investing in cryptocurrency. And so what that reason is because you'll never make it because of the psychological problems that you have to go through. And now I think you all heard, if you put $1,000 into Bitcoin in 2010, it would be worth $90 million today. And you've probably all heard some version of that. But the truth is, the harsh truth is, even if you were there in 2010 and you put $1,000 in, most likely you never would have made $90 million. And the reason why you never would have made the $90 million like the market says you could have is because you never would have held on that long. You see, even if you put $1,000 in, that ride from 2010 to 2017 was very, very turbulent. It actually dropped 80, 90% multiple times. So kind of like where we're at right now with this correction, and as bad as it feels, you would have had to live through this several times. And in fact, it would have actually dropped and stayed down for multiple years until you've given up all hope. And then even if it would have come back, you finally got that $1,000 back. Once it hit 2,000 or 5,000, you probably would have sold, or 10,000 you would have sold, or 20,000 or 1 million. You turned 1,000 into 1 million and you would have sold. So how would you have stayed around to 90 million? Well, the only way that you would even have a remote chance of actually turning that 1,000 into 90 million is with what I'm going to show you today. All right, it's a pretty simple way to do it, but it's actually really hard to do it. And so what that is it's spotting a trend, identifying who you believe will be the leaders in that new trend, buying them early, and then waiting until the trend develops. All right, so that's the key. Waiting until the trend develops. And so I'm going to show you this chart right here. As you can see, this goes only back to 2013, but if you would have bought Bitcoin, real early here, 2013, and you could have made it up all the way to here, you would have made a lot of money. It seems super simple, right? But look at this dip right here that we had. Right here in this dip, it went way up and then it dropped back down. And if I zoom in, I know it looks like a little blip right here, but if I zoom in, you can see actually how bad that was. So the price of Bitcoin went from, only $100 up to about $1,200. And then it dropped all the way back down to about 400 bucks. So kind of like where we're at, right? Went from 200 to 1200, all the way down to 400, and then people are like, oh my gosh, I'm out, I'm out, I'm out. And then to make it worse, as you can see back on this chart, it actually stayed down. And it didn't get back up to the $1,200 level until 2017. So you would have literally had to wait like 3 years to see that money come back up. And do you think you could have held on that long? Do you think you could have held on for 3 years? And then when it finally did get back to 1,200, you probably would have sold, or 2,500 or 5,000, etc. And then let's say it gets up here to this $5,000 mark, and then it drops back down right here. You're like, oh my gosh, I've been through this before. I'm tired of this, and I'm out. But again, it's because you didn't have the right perspective. And so that's my goal for this video today. I want to give you that perspective. I want to help educate you because I lived through this, and it changed the way that I view the market and has given me the tools and the skills I need today to hopefully be successful in this market. And I want to share that with you. So I'm going to, you've heard a bunch of comparisons of how this technology boom, the blockchain technology boom, is similar to other technology booms, and it's most often referred to like the tech stock boom of the 90s. So from 1990 to 2000 is when the internet first started taking off. All right. So I prepared this chart. So this is the NASDAQ, and the NASDAQ was used to track the tech stocks. So this is really for the internet stocks. And you can see right here in about 1990 is kind of when it first started. There was this little dip. and you can see that it just took off. And when you look at this chart from 1990 to 2000, it looks like what we call a hockey stick. I mean, it almost goes straight vertical. And it's very easy in hindsight to go, shoot, I could have just bought in 1990 here, and I could have come back in 2000, 10 years later, and I'd be a multi-billionaire, right? But the truth is, living through this was actually much, much harder. Now, what I believe is that history shows that every technology boom that we have has a shorter and shorter adoption cycle. So the time it took for everyone to get cars, the time it took for everyone to get radios, the time it took for everyone to get TVs, the time it took for everyone to get cell phones, internet, and now cryptocurrency is going to be very small. And so we see it happening faster. So even though this took about 10 years to develop, I believe we're going to see this happen much quicker over a much shorter period of time. One of the reasons is just that's how kind of technology goes, but also you have to remember that this was pre-internet. So we were in the analog age. There was no such thing as digital. So we didn't have cell phones. We didn't have the internet to share information. Nobody knew about what was going on unless you were really, really involved. And even if you wanted to take advantage of this, even if you wanted to trade this market, buy stocks, sell stocks, whatever, there was no like E-Trade. There was no like Yahoo Finance to like push buttons. You literally would have to go in your car down to your broker's office and sit with them in order to buy and sell these stocks. I mean, it was really, really slow. It was analog. But now, and also, this was mostly a U.S. market. There was a little bit of outside investment, but mostly a U.S. market. Now, compare that to crypto. We have a global market. So we have a global market and we're in the digital age. So now we can buy and sell on any number of exchanges with a click of a button from our mobile phone as we're walking around. We have information coming at us in real time. And so that's why this market's going to happen much faster. But we're going to look at this for a little bit of historical perspective because I believe this is what's going to make you successful moving forward. So what I want to show you next is just really what it took to live through this. And so what we'll do is we'll just look at one company. And here's a company called Oracle. And so this is, they were very instrumental in developing this internet space. And so really what we want to do is we want to identify a trend. Like at this time in 1990 or 1994 or whatever, I believe that the internet was going to change the world. I believe it was going to get mass scale adoption. A lot of people didn't. And I know in hindsight, it sounds kind of funny because obviously we have it now. But in hindsight, I mean, even Bill Gates was quoted as saying he thought it was a passing fad. There was many well-known economists who were shooting it down saying, imagine this world. They want us to believe we're going to buy stuff online. Imagine they think we're going to have virtual meetings. And they thought it was ridiculous. But I believed it was going to be the future. And then you identify who you believe will be the key players of that future. And you get in with them. So Oracle was one of the infrastructure projects. They were one of the companies that helped develop the technology for the internet world. And so we can look at this and you can see here from 1990 how it grew up until 2000. But you can also see that there was some bull markets here. I'm sorry, some bear markets. But you can tell that the difference with approaching the market like I'm talking about, spotting a trend, identifying the leaders and going for a ride is that I believe it's a much more accurate way to play the market, to invest in the market. And I think a lot of you guys can recognize this trend that's developing with blockchain technology. And I think a lot of you guys have seen the future, even though we have people out there saying, imagine this world where we're going to buy stuff with Bitcoin, right? We have the same things happening that we had in the tech stock boom. But this time you have a chance to play this different and play the trend. And the beauty of this is that by spotting this trend and getting in early, we can make a lot of money. And you only have to get the big picture correct. And everybody wants to know what's going to happen with Bitcoin in the near future and these cryptocurrencies. And is it going to take another dip before it goes back up? I don't know. I don't have a crystal ball. And the truth is nobody does. But I see the trend, and I know the trend's going up since I can play this long-term trend, and you just have to get that big picture correct. All right, so I'm going to go back to this slide. So this is back to the NASDAQ, and what I wanted to show you here is that we had these big dips. You can see it's up to almost 500 here, and then it drops down as low as 300 here. So even though we had this hockey stick where it went up, we had these bear markets that we had to live through. And again, when you go back to this big chart, you can see it's just going almost just straight up. but it just wasn't like that, right? It helps you when you look at this, but you can see these big dips. And so, I mean, this is what it was like to live through this. You had to go through these bear markets, kind of like we're doing. And so a lot of people, unfortunately, get shooken out here, and then only to either buy back in later or to get passed up altogether. So here's back to Oracle. So this was one of the companies that we identified being one of the leaders. Now, I was pretty young during this. I was only, at this point, I was only about 18 years old, and I was only just starting out my investment life. And unfortunately, I didn't have the skills and the mindset that I have today. I didn't have what it took to be successful. I was just too young. But thankfully, it taught me all the lessons that I need today. And you can see here, here's Oracle, and this is just in the beginning in 1990 as this trend was taking off. It came all the way up here to like 70 cents and then dropped all the way down here to like 15 cents. I mean, that was about 12 cents actually. It was drastic. But if you could have bought in right here at 12 cents, imagine how much money you could have made, right? I mean, even $200 or $400 could have turned into hundreds of thousands of dollars. And here's back to the NASDAQ. And here is the 94 to 95 range. And this was another bear market. And what's important about this, and the reason why I want to show you this chart right here, is because I believe that this is where we're at today. I believe right now we're in this 94-95 phase. And the reason why I say that is because from 1990 to 1994-95 was the whole market was really driven by individual retail investors like you and I. And it wasn't until 1995 we had Netscape. If any of you are old enough to remember, Netscape was like the first time institutional money came in. It was like the first IPO, and it really kickstarted the entire market. And so up to 94 was all individual retail investors. 94, 95, the institutions came in and really took the market from 95 up to 2000, which is back to this. You can see right here, 94, 95, we had this dip, and then you can see it just take off like crazy right here. And so right now, this is where we're at. We're in this 94, 95 phase because I believe in the cryptocurrency market, we're about the exact same thing. What we've seen so far has been driven by individual retail investors like you and I. That's Crypto Boom 1.0. And to get the market into the trillions of dollars, where I believe it's headed, right, pretty quickly, it's really a matter of getting the institutional investors in, getting the institutional investors on board. And so we're in this 94, 95 bear market. And as you can see, we had this dip, but it looked like a blip in time. But again, if I zoom in on this 94, 95, you can see just how brutal this was. So you can see, I mean, we had this peak right here in like January of 94. This is like December, January. We had this sell-off. It popped back up again in March. We were at about 850 right here. And then it crashed all the way down here in July to about 600. And then it kind of came back up, gave everybody hope again. We're up to about 780, almost back up to the 800. Okay, we're almost there. It's been, what is that, about 6 months. We've almost got back there, and then nope, crashes down. And then, oh, comes back up. Okay, it's going to break out. Nope, and it crashes back down again. And this is like a year now. A year of it just going back and forth and thinking it's going to break out. And so now in this crypto bear market, it's been about 90 days. And I think a lot of people are still holding on strong, but unfortunately a lot of people have been shaken out of the market, and that's 90 days. This right here, what I'm showing you, is a year that we had to deal with that. I mean, it was brutal. And at this point, I was probably about 20 years old, and I really remember this. I'd now been kind of investing for a couple of years, following the markets, and living through this. I mean, I was just too young. I didn't know, and it really messed with me emotionally. I thought I was really smart. A lot of people thought they were really smart. I remember at this time I had a lot of friends that were like thought they were going to be full-time day traders, and then we all got shaken out of the market there. But what was important is to understand the trend. And again, I can look back on this and go, shoot, if I understood that the internet was going to be as big as it is today, and I was buying in the best companies like Oracle, I should have been buying into this weakness. I should have bought here in July. And I know everybody says buy the dips, and I don't agree with that. You don't always buy the dips. Sometimes it's going down. But in this case, I knew that the trend was going up, and I knew I should have known better, and I should have been buying in. I could have bought more into the weakness. Now, going back and looking at Oracle again, what we can see here is that we had dropped to this low of about 12 cents, and then we can see that it just started climbing, and it climbs all the way up here almost to $2, and then drops back down, and then it almost climbs back up to $2 again, and then drops back down, and you can see it just coming and going, coming and going, and this is that same period, that same 94, 95, bear market right here. And then if we go back to the NASDAQ, what we can see is that we got out of that 94, 95 bear market, and we started climbing back up again until about 98. And now things are selling. We're up to about 1750, and then boom, crash all the way down to 14. And then recover to 1600, and then boom, crash all the way back down to 14. And again, I mean, this is October, November, January, February. This is about 6 months of this happening. So again, right, we're in about 90 days of this bear market, but this is over a 6-month period, and this is the second time it's happened in this 5-year bull market or this 10-year bull market that it's happened right here. So you can see that. So I mean, it dropped big time. And then if we zoom back out again and then look at the NASDAQ, back to Oracle. Going back to Oracle, we can see over the same period we had the same thing, got up to about $7. And now remember, we had bought it at 12. Using that other example, we bought it at 12, and now we got it all the way up to $7. So you bought it at 12 cents. You've ridden it all the way through the bear market, all the way up to $7 from 12 cents, and you're like, oh my gosh, we need to sell. We need to sell. Maybe you do, maybe you don't, and then it drops all the way down to 3. Sound familiar? Right? You bought Bitcoin and went to 20,000, dropped all the way down to 7, and now you're going, shoot, why didn't I buy? I bought it at 12 cents, it's up to 7 now, and now it's down to 3. I knew I should have sold, right? And that's what you say. And then it climbs back up to 5, it's 550, and then boom, back down to 3 again. Oh, why didn't I get out, right? And that's what you're saying. Now, I know when you look in hindsight, it's really easy to look at this chart and go, well, shoot, why didn't we just sell it when it hit 7 and then buy back in when it hit 3? That would have been easy. And then, we could sell it again at 550 and buy it again at 3 again. Why don't we do that? And I know a lot of people ask that question, but unfortunately, history proves, facts prove that nobody can do that consistently. No one can do it accurately. Now, I know there's maybe a lot of people that are approaching this market as a trader, and there is some movement that you can profit from. Unfortunately, the fact is that over 90% of traders do not make money, especially in the cryptocurrency market. So then that leaves about 10% of the people that are making some money, but I don't believe any of them will make as much money as if we just would have bought it at 12 cents and held it to $9, as you can see over here in 1999. So that would have been the difference. And so we don't have a crystal ball. Nobody can do this reliably. In hindsight, you ask yourself, why don't we do that? But the fact is, we don't have crystal balls and nobody can do that. Now, when I go back to the NASDAQ from the same period, you can see here up into 2000, we had this dip right here, and it dipped all the way to 1300, and then the top of the bubble is always the most frothy. It always moved the fastest, and so you can see right here from about October of 1999 at 1300, and then it shot all the way to 5000 right here. Now, if we look at Oracle over the same period, we can see it kind of had this dip and got down here about $5. So we started here at 3, we climbed back up to 9, we looked at on the previous chart, down to 5, and then up to 12 right here. Now, we can look at Bitcoin and kind of see the same thing, where we had this run up here all the way up to this 1200 and then drop down to this 5000 level, and then again here we can see this bear market lasted almost 3 years right here. And then going back to this NASDAQ chart for comparison, we can see this run up. And so I just wanted to use that as a little bit of perspective for you, of knowing what we're dealing with, where we're at, and really what we have to expect coming in the future. So we are going to have these bear markets like we're in right now, and we're going to have more of them. And the reason why we're going to have more of them, obviously, one, history shows us, but it's the natural progression that these technology cycles take. You have to understand that we're in so early. We're in so early on this developing trend that it's going to be a bumpy road. And that's why we have the potential to make so much money. If you don't like the volatility, if you can't handle the emotional roller coaster, then there's plenty of other markets that you could be in that don't have the volatility that we have. But at the same time, you're never going to make the potential gains that we're going to see from being in this space. So what I want to leave you with is a couple things of how you're going to be successful playing this market now, knowing what you know. So a couple things. First of all, the way that you can manage your staying power is to understand the trend. Do you believe, ask yourself, do you believe that blockchain technology is going to revolutionize the world? Yes or no? For me, it's a yes. Then identify who do you think will be the players in that new world. You identify them, you buy them, and then you wait for the trend to develop. Now, how do you keep from selling at the bottom and getting shaken out? And how do you avoid selling too early when the price goes up? Well, you do that by understanding the trend, just like the internet. If I could have bought Amazon in 1997, I would have bought it super cheap. But it wasn't really until 2007 until Amazon really started taking off. We didn't even have broadband internet till like 2003 to 2005. So you would have had to wait, 10 years for Amazon to really develop. And it wasn't really until 2017 now that it's this massive conglomerate, and you would have been a multi-millionaire now owning Amazon that whole time. And so my point is that you didn't want to sell Amazon too early until it lived up to its full potential. And the only way you could avoid that was understanding the trend of the internet, where it's going, and staying in until that trend develops. And so blockchain is the exact same way. Again, as I started out in the beginning, people ask, what can you even do with it today? You can't even buy anything with it. That's true. The trend is not developed. So the way that we have the staying power is we understand the trend, we get in early, and we're going to wait until it's develops. And it can be a couple of years. So be prepared for that. Now, how do you hold for a couple of years? Well, you do that by starting with small position sizes. $200, $400 can turn into hundreds of thousands of dollars. You don't need to put a lot of money. If you put in $500 and it drops to $80, you're not probably going to care that much. You can afford to wait. And likewise, as it goes up, you can wait. And so you need to start with small, rational position sizes. That's the only way you can hold, because it's going to be a long road. All right, so that's what we're going to do. We understand the trend. We're going to get in on who we believe will be the market leaders. We're going to use small, even position sizes, and we're going to wait for the trend to develop. Don't worry about what's going to happen here or there. Just like as you can see this chart, 94, 95, we had that dip where we're at right now. 98, 99, we had another dip, and then it just kept moving up. Now, I'm going to end this video with a couple final things. So I made a statement that I believe we're in the 94, 95 range of this chart. And you can see that's this dip right here, and it's right before we really started taking off kind of in this parabolic climb. The reason why I said that is because I believe it was all individual investors at this point, and now the next boom 2.0 is going to be institutions coming in. Now, I've been talking about institutions coming in for quite a while. I've really been pounding the table on this for probably 6 months now, and you're probably like, yeah, we've heard that already. The institutions are coming, they're coming, right? Well, they are coming. And so I want to give you a couple of points about that. So first of all, what we saw in the 94, 95 bear market was we saw prices coming down at the same time we saw investments in the space going up. So even though the market was crashing and individual people like me were getting really scared and shaken out of the market, the institutions were dumping money in. All right. What they were doing is they were investing into the infrastructure to allow the growth. So it's kind of like if I wanted to develop, if your state wanted to develop a new area, they can't really develop that area until the infrastructure. They need to build the roads. They need to bring the plumbing, the electricity in. Once the roads and the electricity and services are in the infrastructure, then it can begin to grow. And so that's kind of where we're at. We've gotten as far as we can go with some individual settlers, but in order to bring the masses, we have to build the infrastructure. And so that's what we saw in 94, 95. The market was crashing, but at the same time, infrastructure projects were being built, and that's where we're at today. So again, I said that institutions are coming, but let me tell you a couple concrete facts of what happened. So just in the last 2 weeks, here's a couple things that we've seen. One, we saw the CBOE, that's the regulatory body of the United States that manages the commodities and the futures trading. They wrote a letter to the SEC, the Securities Exchange Commission, asking them to approve a Bitcoin ETF. And that is massive, massive news. And let me tell you why that's massive. Now, we already have futures on the commodity. So the CBOE, the CME, they're doing options or futures trading. But that's not really a good thing. In order to do that, you're not owning the asset, you're actually placing bets on which way the asset moves, not owning it. And so it does nothing to help it, and really it's all about manipulation. The difference of an ETF is ETFs will actually own the asset. They'll actually own Bitcoin. And then the ETF makes it very easy for everyone to buy it. Right now, buying Bitcoin, buying cryptocurrencies is hard. And that's the barrier to entry, which has been good for us. It allows us to build our positions. But as you know, it's very difficult to create your account on Gemini or Coinbase, to get through the KYC, get your account approved, do the transaction. It's hard. It's dangerous. It's tricky. It's intimidating, and so it's kept people out. Once it's an ETF, it'll be in every single stock trading account. So if I'm a Fidelity or E-Trade or Charles Schwab, I'll see the ETF and I can click a button and buy it. It's the easy button. It's going to bring so much money in, and as more money piles into the ETFs, they're going to own more Bitcoin. And when they did ETFs on gold and other commodities, it was really, really bullish. And so I believe that's massive news. We actually have them writing a letter to the SEC, and what they said is that they said that they believe it's now ready. The markets are ready for that. So that was really big. So that's big. That's going to bring in all these retail exchanges, like I said, Charles Schwab, E-Trade, into the Bitcoin space. Another couple big things. A Goldman Sachs company, a subsidiary, bought Poloniex crypto-to-crypto exchange for $400 million. Now, for those of you that don't know who Goldman Sachs is, it's the bank. Basically, if you work at Goldman Sachs, then you go work in the government, at the Treasury and the Fed. And if you work at the Treasury and the Fed, you go back to Goldman. I mean, it's the bank. They are running things. They're more connected than anybody. They're not connected. They are the one who connects. So for them, for one of their subsidiary companies to buy a crypto-to-crypto exchange for $400 million, which is a massive amount of money, that is such a large amount of money to invest in this space. And it's a crypto-to-crypto exchange. So for them to spend that much money on a crypto exchange, it means they're extremely bullish. They believe that these crypto exchanges are going to be going for a long time. That's why they'd spend that money. Now, we saw in South Korea, we saw a multi-billion-dollar conglomerate working with the government in South Korea do a partnership with OKCoin Exchange. Now, you may not have heard of OKCoin Exchange, but it's the third largest exchange in the world. And so we have this multi-billion-dollar conglomerate in conjunction with the government making a partnership with the third largest cryptocurrency exchange in the world. Massive. I mean, massive. This was just last week. Well, another thing that we saw last week is a group of South Korean investors spent $400 million, just like the other deal, $400 million to buy Bitstamp, which is another cryptocurrency exchange. I mean, we're talking about billion-dollar deals happening here. This is infrastructure. And then we had Yahoo Japan said that they're going to launch a crypto exchange in 2019. And then we had a subsidiary of the Canadian Stock Exchange. They said that they're going to open up crypto brokerage services. So what's happening here is we have the most connected, the biggest people in the world, governments, billionaires, world banks, investing money in the middle of a bear market to build infrastructure. Okay, this is not them buying Bitcoin. This is them building the roads and bringing the electricity in to bridge the gap. So right now we have cryptocurrency, and over here we have institutional investors with trillions of dollars. There's no roads to connect these two. And all those things I just stated are the roads and the infrastructure that's being built to allow those trillions of dollars to come in. So I know I've been saying it for about 6 months, but that's because it's been coming. But now there's actual concrete things happening. Now, these are announcements. So obviously, as you can imagine, it's going to take time for this to get built. So we're in early on the trend. We're in early, which is why we're going to make that money, but we have to be patient. So that's our methodology. Identify the trend, identify the leaders, get into them early, and sit back and wait. And so as excited as I am about this, as excited as I am to understand the technology, and I want to read all the developments, and I'm excited about that, the investing are a little bit boring because I bought these companies and I'm not going to do anything with them for 2 years. It's boring, but I'm excited about the transformation. I'm excited about the developments. And so we spotted the trend, we identify the market leaders, we get in early, we use rational, even position sizes, and we sit back and wait. Don't get shaken out. Don't worry about Twitter is going to ban cryptocurrency ads or Facebook's going to ban cryptocurrency. That doesn't matter. I'm talking about billions of dollars being spent right now by governments, world banks to build infrastructure to allow this to happen. So that's what's happening. That's how we're going to play the market. I know the volatility sucks. I hate seeing my portfolio lose so much money. I've gotten absolutely crushed, like all of you guys have gotten crushed, but I'm not doing anything about it. I'm sitting, I'm hodling, I'm waiting because I understand the trend. I'm investing in the trend. We're going to ride it back up. Just like in 94, 95, I got shaken out of the market. I'm not letting that happen again. I'm going to ride this trend until it develops. Hopefully you're going to come along with me. And that's it for today. Hopefully that helps out, and I'll come back with more updates as they come out.